SMB continues with me, Rita Cavanier, and welcome to join us on our SMB topical discussion. This time we speak about oil and gas, we speak about banking, we speak about sustainable banking, and also how oil and gas and banking definitely are making lives improve. And on the 2nd of February 2022, we witnessed the announcement of the final investment decision for Uganda's oil and gas project by Total Energies. A number of partners that were present. We had CNOOC there, Uganda National Oil Company, and the Tanzania Petroleum Development Corporation there. And this was signifying the commitment of oil companies to invest close to around $10 billion to develop Uganda's oil and gas resources. And there you've got institutions on environmental, social, as well as governance, values and metric representations on revolutions on how corporations are going to be managed, measured and operated. And this morning, welcome. To join me in studio is Benon Okwenji, who is the General Manager Financial Markets at Centenary Bank, who will be as well sharing with us to understand more on what it means for the banking sector to collaborate or to make integrations with the oil and gas preparations moving further. Thank you so much for joining us, Benon. How are you doing?
Thank you, Rita. Good morning. I'm doing great.
Good morning.
Thanks for having me.
Thank you. And maybe if we could begin it from telling us about the role of banking sector in the country and how it contributes to sustainable development of people.
Okay. So probably I'll start with just the role of banks in Uganda. They play a very important role, especially in terms of driving economic growth. So banks take deposits by encouraging savings, and then they take those deposits and advance loans to the various sectors of the economy, which now leads to economic activity, which now leads to growth. If you look at Uganda, we're still pretty much a cash economy. So banks also play a large role in terms of the supply of money throughout the economy. Also in terms of the collections of money, pretty much agents of the Bank of Uganda, which is an extremely important role. The other, of course, banks, we facilitate trade, both locally and internationally. If you look at foreign exchange, the overwhelming majority of foreign exchange is done through commercial banks. I think our daily turnover in foreign exchange is about $120 million. So the bulk of that goes through commercial banks. Banks also act as advisors, investment advisors, companies consult us on many different things, on macroeconomic factors, you name it. Banks facilitate investments. So if you have excess money that you want to invest, a bank will invest it for you and give you a higher return. Probably two very important functions that banks play, which are probably not widely talked about, is banks facilitate Bank of Uganda's implementation of monetary policy. So monetary policy is a tool that the central bank uses as a way of managing prices in the economy. They mainly look at things like inflation. So whenever Bank of Uganda is signaling, whenever they are injecting money into the economy, whenever they're mopping up excess liquidity, it is through commercial banks that this is done. Most importantly, or equally important, is on the fiscal side, which now sits at the Ministry of Finance. So fiscal policy essentially is how governments earn money and spend money. So if you look at the role of commercial banks in a government's fiscal policy, we're probably their number one agent. Okay. So when governments want to borrow money from the domestic market, they have to do it through commercial banks. When they're collecting taxes, really the bulk of that is actually done through commercial banks.
Okay, thank you. I am learning about the monetary fund as well as the physical process. And maybe I can take you through the other, if we've got the oil and gas sector. And today, majorly, we're speaking about banking in oil, gas, and sustainable banking as well. Benon, if you could share with us regarding the oil and gas sector. This is an exciting moment for Uganda for the viewers out there who are watching and who may not actually be so familiar with it.
Okay.
Are you able to give us a brief overview on how this all entails for the banking?
Yeah, so I'll talk about the oil and gas sector. First of all, like you rightly said, it's an exciting time for Uganda. The fact that, it's been a 16-year journey for us to reach the final investment decision. But for those who aren't familiar with the oil and gas sector, I'll probably break it down into three main components. One is the upstream. So upstream is where things like exploration, development, production, decommissioning happens. So currently, as I'm sure people have heard of, the East African crude oil pipeline. So the construction of the pipeline would be what is considered in the upstream section of the sector. Things like field developments. If you look at the production sharing agreements between government and the oil majors or the oil players, that is upstream. When you look at now midstream, so there's upstream and there's midstream. So midstream is where things like transportation, refining, gas processing and storage takes place. So again, related to what's been happening here, we know that we are building a refinery for our oil. So we're looking to not just export the raw crude oil, we want to refine it. So the refinery is where it will be in the midstream area. Again, if you look at the pipeline, the East African Crude Oil Pipeline, ECOP, the oil is going to be transported from Uganda to Tanzania to the point of Tanga. So all the activity around that is midstream. And then the third component is downstream. Okay, and I think downstream is something that most of us are familiar with. Downstream basically is bringing the usable products to the end users and consumers. So, it's the distribution, sales, and marketing. So, for example, when you go and you drive your big car to the petrol station and you fill it up with oil, with fuel or diesel, all of that would be downstream, and all of the activities around that is downstream.
Okay, and where does the banking heat up to the oil and gas? Where do the banks?
Banks play pretty much in all three of the sectors in one way or the other.
Okay.
Yeah.
All right. And also, as for commercial banks are actually concerned and their capabilities, what role are you playing in the oil and gas sector?
Yeah. So the world over, commercial banks play a huge role in oil and gas. First of all, the oil and gas sector is capital intensive. It needs to be funded, So, and again, the world over, where does the money come from? It comes from banks, from the financial sector. So funding is one of the areas.
Say money comes from the people.
Yeah, it does, but you see, banks, like I mentioned earlier, banks play a role of being a conduit. So they take on deposits, they take those deposits and they advance loans to the various sectors and companies. So, of course, there's funding, which is a major role that banks will play. But outside of that, there are some actual specific and niche products that over and above lending is what banks will use to facilitate the sector. So, for example, we can look at things like trade finance, okay? There's quite a number of things like trade finance. If we talk about letters of credit, which are used for the import and export of goods, bank guarantees, of which a bank will guarantee a transaction for someone, for example, who is looking to import something, invoice discounting, ship finance, structured finance, commodity finance. So these products that banks offer to all the players in the oil sector. Then, so like I said, trade finance is just one of the things. We have things like asset finance.
And then, as a centenary bank,
yes,
what role are you playing?
Yeah. The products what I'm reading is actually what Centenary Bank is offering. Things like asset finance, where it's a type of lending that gives a business access to things like equipment, machinery, vehicles. Of course, we give term loans. Term loans typically are loans used for capital expenditure. Working capital is another thing that we also provide. If you're a company whose cash flows are not so regular, but you need like a gap financing, we can do that. Treasury products, which actually is the area I'm most familiar with, I mentioned foreign exchange. So of course, anyone looking to import something will need to buy forex, cash management. You know, if a company needs to pay salaries, if they need to pay vendors, if they need to make transfers, and things of that nature. So that's what we can offer.
And there has been a very big debate on the average Ugandans who will be benefiting from the oil and gas that is being highlighted here. And this is actually known as local national content. It has been sung on the convention, and it's now the campaign that is actually ongoing. What are some of the challenges around local content that you have observed so far?
Yeah, okay, so let's first define what local content is. So local content is the capability of a Ugandan registered company to significantly participate in the oil and gas sector. Like you rightly mentioned, there are some challenges, and I think why the focus is on local content or national content is that with all this investment that's going into the sector, it's extremely important that the average Ugandan on the ground can feel it, you know, the trickle-down effect. But just to highlight some of the challenges, and they're not unique to Uganda per se, I think it's, in this part of the world, it's quite the same. So for example, the requirements. So you find that for some of the large contracts that are given, you know, some oil and gas companies will request for requirements that are really out of scope of an average Ugandan company. I can give you an example, you know, things like insurance, you know, insurance provisions. You find that some of these requirements are just not possible for a local company to be able to meet. Funding is a big one in terms of affordable funding. Now, the reality is interest rates in Uganda are high, the cost of doing business is high. But when you compare that with, say, a foreign company that's coming in, they are able to fund a lot cheaper. They're able to access a lot cheaper funding from where they're domiciled. You know, things like resources are an issue. For example, how many companies can afford to hire full-time sales and marketing people, just as an example. The big one, which is quite big, is information asymmetry. And what I mean by that is the failure of local companies to actually know what's happening in the industry. You know, what are the prospects? You know, there's a lack of visibility.
So I'm picking this from what you're saying.
Yeah.
If there is a challenge, you know, of integrating all these services by the local person who cannot afford, for example, insurance, equipment may be expensive. Maybe what is your advice to these people? Meanwhile, moving forward to really tap onto those opportunities, how can you advise them from what you're highlighting?
Okay, so I guess in terms of local content, how can we, what should be done in order for it to be realized?
Yes.
Well, there's a number of things. One is, I talked about the information asymmetry. So I think it's important that the regulators and stakeholders do a better job of communicating what's exactly happening, the prospects, the plans for the sector. There's also need for all stakeholders, government, and all of us to really facilitate and support the capabilities of these companies to get them to a point where they're actually attractive for funding. It's one thing for the cost of loans and finance to be high. It's another thing for an entity to actually qualify for that. You know, building internal structures and capabilities. One area also, which I didn't touch upon earlier, is training and skills. You know, that's also one area where, from a local content perspective, we struggle, and a lot more needs to be done. So we can look at, you know, how can we, you know, build capacity? How can we train? How can we educate? Maybe we need to look at our educational system. But a big one, and the biggest thing that I would encourage local companies is to partner up. Partnerships are extremely important. I think what we've seen is many companies go about it alone. So you have two small companies trying to no, but you see, again, we're talking about local content. We're talking about international companies who have been doing these jobs all over the globe. Competing with them becomes difficult. So a way of improving your chances is if you partner, say two small local firms come together and partner for a particular tender They can build economies of scales. They can complement each other. I think that's a better option instead of going in alone. There's so much to go around. I mean, there's a big industry. There's enough space. So I would encourage all of them to really partner up.
You know, when you speak about partnership, you know, I've partnered with colleagues and some things don't work out because you find you're two different people at some point. I mean, there is lack of trust at some point. I don't know what your opinion is when we still say people to partner with other people to do business. Maybe you can have a word of advice as they're doing this business together that can make it stronger.
No, I mean it's a straightforward thing. If two companies are going for this, are tendering for the same job, means they're doing exactly the same thing. So you just sit down and say, look, if we come together and partner, there's a higher chance of us actually winning the tender. So you're strong in this area, I'm weak in this area. I'm strong in this area, you're weak in this area. Let's come together, let's jointly put in a bid, and let's get it over the line. Okay. That's the advice that I'd give them.
All right, and still I'm going to drive it to the bank on how they're actually supporting local content. What do you think banks are doing to support local content? And then you will take me to what Centenary is actually doing to support local content. Centenary Bank is one of the banks that I saw was lifted up there around one of the partners, at least tried to be highlighted for people to tap into. So you could share with us what all this is about, supporting local content with banks.
Okay, so I'll talk about, first of all, from a banking perspective, accessibility. So at Centenary Bank, if you look at the Albertine region where the bulk of this activity is taking place, we have 10 branches there. We have 316 agency banking outlets. We have 26 ATMs in the Albertine region. And for those areas where there is no branch, where there's no agent, we actually have mobile vans which actually physically go out and serve these customers. And of course we have our Cente mobile and online banking. But outside of banking, there are some things that we're doing. We do capacity building, and this is through our technical assistance programs, where we partner with some of our partners. And what we do with that is to build the capacity of the local service providers, which helps them meet the requirements to be able to participate in the sector. And this is targeted mainly towards SMEs. The other thing we do is financial literacy. And with that, it's mainly targeted to the project-affected persons, where we train them on financial products and managing money and things of that nature. And again, I'm sure some of our colleagues in the other banks are doing as much as possible in the same thing.
Integrate people's solution. And let's shift gears a bit to about sustainable banking, because I want us to at least today understand as well what it means for sustainable banking, how as an individual, how as an organization you can actually take this up, not just for the sake of banking on a daily basis, but what exactly is the niche around there? What is it, first of all? What exactly is, sustainable banking? So
sustainable banking is a strategy that refers to banking and investment practices that doesn't only purely focus on profit, but also prioritizes things like social responsibility and environmental sustainability. So the hallmark really of sustainable banking is infusing or integrating environmental, social, and governance. This is ESG. I'm sure you've heard of ESG, of infusing it into the DNA of your institution. So in our case, into the bank. And this is everything from a bank strategy to its investment and credit decisions, to its risk management, all the way even to its external reporting. There's also an emphasis of increasing capital or increasing loans and advances to activities which really are positive for the environment and have a positive social impact. Back in 2015, I think the world realized that there was need to act, and they came up with what is called the Sustainable Development Goals. SDGs, I think most people...
The ones we've got visions for.
Yeah, exactly, the SDG, correct. Now, the reason sustainable banking is extremely important. I think at the time they estimated that about $7 trillion was needed every year to go towards that activity for us to meet SDGs. Now when you look at that money, it's estimated that about 85% of it has to come from the private sector, which essentially is financial institutions and banks. So you can see that sustainable banking from that perspective is extremely, extremely important.
Okay, and are there some challenges that bankers face trying to incorporate all this sustainable banking?
Yeah, there are challenges. It's not an easy thing. I know that banks in the Western world and the more developed markets have done quite a bit. I think in our region it's a bit more challenging. But either way, even for them, I mean, it's not easy. I mean, take for example, defining and measuring sustainable banking. That is, it sounds easy, but it actually isn't. And then when you look at trying to translate the environmental,
it makes it harder.
No, because remember, you're looking at environment, sustainability. You're looking at governance. You're looking at all these things. Now, for a commercial bank whose business is to lend, you lend to anyone who meets the criteria. Not anyone, but you get the drift. Now you're saying, actually, wait a minute, I have to now look at my strategy and see how can I fit in the ESG principles. How can I fit it into my ecosystem? Which means I have to now adopt a new strategy. How can I actually identify those opportunities that I can fund which are consistent with ESG? And the reality is there's a shortage of data. There's a shortage of data. There's need to build capacity from an understanding perspective, not only for banks, but even the regulators. So it's not as straightforward as you think. And like I mentioned, even the banks in those developed markets, also a big challenge. It's not so straightforward.
Okay, and as you incorporate this, I know maybe Centenary is doing something, and from the experience around there, how do banking into this business model actually work when you're incorporating this? You can take us through your experience.
So the Centenary Bank experience, I'll probably talk about two of our policies, which I could easily describe in terms of how I fit into that. One of them is our environmental risk management policy. The other is our social performance management policy. So for the ERM, which is the environmental risk management policy, we look at things like promoting resource efficiency, reduction of carbon emissions and abating wastes in our day-to-day activities. We look at minimizing waste and in being as efficient as possible. We look at integrating environmental protection values when dealing with our vendors and our suppliers. Looking in terms of our purchasing and the purchases we make sure there's an environmental element to it. So for example, when we buy things like paper, and also monitoring the consumption of things like paper, disposing of wastes in an environmental friendly way. So that's what ERM looks like. On the SPM, which is a social performance management, it basically takes into account the universal standards of social performance management. So it's things like treating clients responsibly, treating our staff responsibly. We basically define social goals, and everyone from the board to management to staff commit themselves to that.
Someone was just asking here, when we speak about sustainable banking, the mind was shifting to just savings, withdrawing, and then that continuous routine on a daily basis. That is where his mind was. And maybe you can correct. So we're saying it's all taking away to environment, it's taking to social goals.
And that's what I'm saying. That's why I told you it's not easy. It sounds easy, but imagine a bank which has been, traditional banking historically for the last, hundreds of years, has now all of a sudden had to change and incorporate all these elements into your business model. And you find that globally, even as banks locally, as we partner with a lot of these international organizations or partner banks internationally, it's increasingly becoming a requirement from their perspective. If they're going to partner with us, then we need to show them, we need to have evidence that we've incorporated many of these things into our business model.
Okay, let me hope that does not apply to businesses coming to get services to you, and then you're asking, do you have this in your business model? Does it apply?
We try as much as possible to do.
Okay.
Like I mentioned earlier, when dealing with our vendors and suppliers, there's an element that we try and see. I can look at, for example, our premises. Say we're renting premises for our activities. As much as possible, we'll look at things like energy saving and stuff like that. So it is. We're getting there. We're getting there slowly but surely.
And when the whole world is, going digital, it has gone on digital, and nearly every industry is actually being disrupted in one way or the other. How is this affecting, the banking industry?
Yeah, disruption is happening across not just banks but all industries. Looking specifically at banks, you have new technologically enabled forms of competition that are limiting the almost exclusive monopolistic access to our customers. Digital banking was born out of consumer need for more efficiency, for people to be able to complete financial transactions and do banking in a more efficient and user-friendly way. It boils down to customer experience, it boils down to convenience. But disruption from the banking perspective hasn't just happened now. When you look at things like mobile money, which was created in Kenya a while ago, that was really, to me, the first big disruption to banking. Because what mobile money did, it was able to provide financial services to the rural
It's like
of the rural.
Competition.
No, it's not about that. I think there's room for everyone, but I'm just saying in terms of the disruption. Banking is capital intensive. It costs a lot to run a bank, to start a bank, the branch network. So banks, because of that high investment cost, you can't onboard everyone. You can't be everywhere at the same time. What mobile money does is it enables people to transact using their mobile phones. So for me, that was the first disruption in terms of banking. Of course, more recently, you have players like fintechs, you have players like MNOs, those are the telecoms, who are actually doing financial transactions. In 2020, the National Payment Systems Act was assented. In March 2021, the guidelines were released, and what that does is provided a legal framework for telcos, for fintechs to actually do banking. If you read the law, they are directly coming into our space. So there is disruption, but at the same time, banks are not sleeping.
Because I feel like, okay, are you telling us that without these other players, actually banks, you can satisfy the population and the demand that is out there?
Who, as in banks?
Yes.
No, we are, and look, it's partnerships. I mean, take for example mobile money, and that was the point I was trying to make earlier. Mobile money, the daily turnover in mobile money is bigger than the banking industry. The bank, I think commercial bank accounts totaling don't reach more than 10 million, but there are over 20 million mobile money users. The volumes that are done on mobile money exceeds the commercial bank. So mobile money is actually bigger, but there's room for everyone. And like I was saying, is that banks are not asleep. Banks are clever. We know this. So we're also planning and strategizing. I think most banks already had started their digital journey years ago, and if they hadn't, then at least when COVID-19 happened, they definitely had to by force. If you remember, there were lockdowns, customers were not able to come to the branches, so banks had to quickly find a way of being able to serve them without them having to physically come. So if there's any positive takeaway from COVID-19 is that it has fast-tracked the digital strategies of banks, which can still be relevant in this day and age of disruption.
Okay.
Yeah.
Maybe any other disruptions, or they exhausted?
Yeah, from a digital perspective, no, I mean, I think digital, there's going to be continued disruption as we know.
As banks, Daniel, you are general manager at Centenary Bank. financial markets. Do you feel a threat on digitalization?
No.
Because it's taking a verge each day that comes. There is new technologies coming up.
Yeah, no, there is. And I think for banks, for us to remain relevant, which we are and we always will be, is we need to adopt the changing technologies. We need to be with the times. But also, it's not one winner takes all. There's also partnerships. You know, we talked about partnerships in the oil and gas as far as local content. I also feel that even in banking, even with fintechs, even with telcos, there's room for everyone. And I think partnerships is the way to go. It's not that I'm taking you on heads on. There's enough room for everyone. And I think with partnerships, we can coexist. But banks are still, again, we're not sleeping.
Okay, thank you so much. And we're still discussing about banking in oil and gas as well as sustainable banking. We return from the break and exhaust our discussion. In case you just missed or joined in, you can actually go to our social media pages because there is a link there you can follow to catch up the conversation.